Welcome to the Corporate Treasury 101 podcast. This is the second part of our full interview with Danilo Gonzalez, where we discuss the challenges in trade finance within the energy sector. In the episode of today, expect to learn what are the primary challenges and obstacles encountered in dealing with trade finance in the energy sector, how does trade finance in the energy sector differs from other industries, whether there are ESG challenges specific to the energy sector, how do fluctuating energy prices, both on the macro and micro scales, impact trade finance decisions and strategies, and like always, much more. Another interview that happened in person, and you can find it on YouTube and watch Hussam and I interview Danilo, who has been fantastic to us, especially for a first industry-focused interview. We hope you will enjoy the episode. If that is the case, and when you're thinking about how you found our podcast, chances are that it was through word of mouth, social media, or a recommendation from your favorite podcast platform. And this is our only request to you. The best way you can support the podcast is to head to YouTube and subscribe to our YouTube channel, Corporate Treasury 101. That will mean the world to us and help more people learn about Treasury. On another note, this episode is brought to you by Automation Boutique. Automation Boutique is empowering Treasury, finance, and risk management with tailored automation solutions. They use robotic process automation, RPA, AI, APIs, and Power Query to create automations that can work with your existing systems. We partnered with Automation Boutique as we really like their approach to innovation and how they help the industry. For this partnership, they came up with an AI-powered automation self-scan that can help you find out if a business process is suitable for automation and how to best get started. It is totally free, non-intrusive, and only takes about 15 minutes. What's great is that the report you will get from the scan helps you determine if the benefits of the automation outweigh the costs. If you want to have a look, head to the link in the description or to automationboutique.com/corporate treasury 101. And with all that being said, please welcome Danilo Gonzalez. Danilo, to shift to the energy sector, which is maybe where you have particular good insights in this sector, how does trade finance manifest uniquely in this particular industry, the energy one?
Well, in the energy, as in many other areas, let's put it this way, it all depends on what you do. So what is your business? It's not the same if you make turbine engines or the gas turbines, or if you make ships, or if you make only batteries, because the tenors or your project is going to be a long one, like let's imagine a fabrication of a turbine, and plus 15 years of maintenance. Mm-hmm. It means that your warranties will take years to mature, right? And these long tenors will block your lines because they won't be revolving as fast as you want. So if you sell a product that is gonna take for 1 year, then every year you will recover your utilization. If you block your line for 10 years, 5 years, then you are blocked for this long period, and then you very easily you will block your line for 100 millions. Let's put it this way. So that's the key. And in our company, if you need to build a turbine, it's going to be probably a contract for 15 years together with the maintenance. So it's very difficult to not to offer warranties for long periods.
Yeah. So how do you work around that? Because I mean, the more you grow, the more turbines you will eventually sell, and so the more credit line you're using. But then the banks, they are not going to grant you a limited amount of credit, right? So how do you work around that very long tenor that is specific to the energy sector?
You need to set some policies like how much I am going to do. I'm going to offer in terms of, for example, warranties according to the type. So, for example, you can say only 10% of the contract for performance, only 5% on bid bonds, 5% on warrants, for example. So then you cannot offer more than that. You can say, I'm not going to offer parallel warranties, for example, performance plus warrant at the same time, because that doesn't make sense, because the life cycle goes one after another. Even though clients can ask for this, but we try to avoid this. Another way to avoid this is parent company warranties, which this is a good solution, because then you don't need to use a bank or a financial institution for that. And also you can offer corporate warranties that comes from your parent company. So the corporate warranties are exactly the same as a bank warranty. The difference is that if it's executed, who pays is your mother company and not the bank.
But that takes a bit away from the third party aspect of it.
How does the risk get mitigated in that regard for the
Well, it's not very popular, I have to say. So it's a lot of clients say, no, I want a third party, a different institution rather than your parent company. But on the other way around, you always will say, it's true that we are for the same group, but nobody want to risk the reputation of a non-payment. So if the conditions are met, you need to pay, because it's a contract. A contract is a contract, and we need to celebrate this contract accordingly. So at the end,
I'm guessing that those kind of funds, where I had heard of this happen or could happen, for example, is if you have an international company that has operations in a subsidiary in Africa, Asia, like less, more risky countries. If they have a head office in the US or head office in Germany or head office somewhere else, then I guess it would make sense a little bit more, right? So, for example, if you have a company based in, let's say, Mozambique, we were discussing earlier, who needs to buy equipment from Germany, right? Then the company in Germany that's selling the metal or the material would say, wait, I feel risk in doing a transaction with Mozambique. I don't know the jurisdiction, I don't know this. Yes, you say you're this company, but I have no guarantee. But they say, okay, my parent company is also based in Germany, they can guarantee it. They say, okay, I understand German jurisdiction. I believe that I can take this risk, and it's a lower risk for me. I wouldn't get trade finance with a German company. I would with a company in Mozambique, because I don't understand the jurisdiction. And then maybe...
There is a small difference between a parent company warranty or a corporate warranty. The parent companies is based on the fact that if I don't fulfill my commitments, my parent company will do it. The corporate is the payment side. No, if I don't fulfill my agreement, then you can execute the warranty and they will pay for me. So it's more the payment side, and the other is more the fulfillment of the activities when you make a parent company warranty.
Interesting. So for performance, it will make sense to actually have a guarantee from a same entity, which is at the group level, because they have the knowledge. A bank will not, implement and start and building your turbine in your place. They will pay for it eventually, but they will not fulfill the object of
the obligations. Yeah.
Interesting.
Yeah.
Does the renewable energy sector have any differences versus the broader energy sector?
Yes, because renewables it's basically something that you can redo, no? And not everything in the energy sector is renewable, right? So it's like even when we say sustainability, so not everything that it's green is sustainable, right? Because it comes with the fact of the reuse of the nature, but as well how green you are at the same time. So this is the key element when we talk about renewable and sustainability at the same time.
How does that affect the trade finance aspect, or does it?
We see now institutions, banks especially, that they want to be greener, right? So they are looking at the portfolios where they can invest the money in terms of how can I be greener. So I'm going to look at the energy renewables business or waste management or water management, reduce of emissions, and put the investment in those projects that are ESG related, let's put it this way, in order to increase my numbers or my rating in this regard.
Banks, so would they give you more favorable rates as a renewable company? Because it benefits them to get a better ESG score, which lends them to better favorable rates from their central banks, for example, right? That's kind of where they're...
I think this probably is coming, but I think now it's behind the curtains still, in which every bank has an internal credit committee. No, they will assess your company, and probably the green factor will give you extra points, and then you will get a pricing based on this. I trust is more or less like this, but we are not inside the bank to say, okay, how you are assessing your credit rating in order to see if I am. If my green part is helping me, right?
Yeah. And it's not a bad thing, on the contrary, right? If you can get more credit, the banks also...
It's going to be an advantage if it's the case. If this, this is what we are hoping for, because we are, our company is investing in this, in this sustainability, affordability, and reliable energy. So, yes.
But in the type of instruments or the amounts involved or the tenors involved, is there any difference compared to the traditional quote-unquote energy sector? It will be pretty much the same. It's just the same bank that changed.
It's the same, and even though for example, in previous, when we were a big conglomerate, trade finance can receive a request from mobility sector, from energy or health and care sector, and then trade finance department is kind of agnostic regarding the area. You will treat as a normal transaction towards the bank. Now things are changing, so probably they will look for these projects, or even try to invest on these projects. Where are the green companies in order to create new products, new policies for companies that are greener than the others.
Okay, so interesting. Do you have specific examples or case studies where you saw trade finance really enable something in the energy sector from your experience?
Yeah, I can mention a couple of examples. In Italy, for instance, there was we are building a big power plant in Ostiglia, and there is another one which is called the Tyrrhenian Link, which is the connection between the Sardinia, Sicily Island with the mainland. Okay. So there is going to be
with the football.
So around there.
Yeah,
the connection of the two.
Exactly. And there is going to be an electrification system, a massive one that is gonna provide sustainable energy to millions of people there.
Amazing.
And this can only achieve if you have a project export finance in place for the customer, because otherwise it's impossible for them. Plus, you need to issue warranties for your customer, but as well there was another component, is the customs authorities. So when you bring the players, you bring, for example, Germany into the game, they need to pay the customs authorities, and the only way to pay customs, you need to open a dedicated account for this. You need to issue another warranty for the customs authority as a compulsory requirement. So with a good expertise in treasury, you can tackle all of these problems that you will face in order to pay customs, to issue warranties, to avoid risk with the tax authorities, and put everything in place in an easy way. Let's put it this way. But it was a combination of trade finance plus cash management plus project export finance all together in all these big projects.
So not to take too much of attention, but what do you call project export finance? Like, how is it linked to trade finance, or how is it different?
It's when for example, a financial institution will help the customer to fulfill the contract.
Okay.
But it's this specific project. Okay. So it's not that because I need money, somebody will solve my solvency problems. No, it's just for this project, I will sponsor you in this specific project because I see there will be receivables that you will achieve this revenue, and then I will finance your project.
So they are not financing the client in particular, they are more financing a project, an idea, something that needs to come off the ground.
And for this, sometimes seller and buyer agree on who will be this potential sponsor. And this helps to the client, because the client might not have the let's say the financial capabilities to achieve what is required. And this is where the third party comes in play and assist in what is missing.
Awesome. And so maybe to stay on that example, but also in general, that are there particular instruments that are more frequently used in the energy sector? I think you mentioned you wouldn't make a mix of multiple ones, performance and warranty, but like what are the most used trade finance instruments in the energy sector overall?
Warranties, LCs, but again, everything depends on where you are operating.
Okay.
For example, Pakistan is a country where LCs are compulsory.
Okay.
And in Angola, it used to be the case. Now it was abolished, like 3-4 years ago was abolished.
Why would the country make letters of credits mandatory?
For security reasons. It's a regulatory requirement
from the government.
Yeah. So the regulators in the country can say, we want to make sure that this money is paid. So the instrument to be used is a letter of credit. Otherwise, you cannot take the money out. And these regulators can define the only way to transact in certain countries, in certain markets. So it will depend on where you operate, and then you need to be flexible. In LATAM, for example, in Latin America, they use a lot of insurance companies, more than financial institutions, than banks, with credit lines. It's here in Europe we don't use much, but it's more expensive as well. At least in Europe, it's getting the same value of a warranty from an insurance company could be a little bit more expensive than what the banks can offer.
Very cool.
And the ESG point we've already covered as well, right? So banks really look at it quite differently as well. So that's good, super interesting. So are there any differences in the energy sector as a sector itself? Because coming from Siemens Energy, you're in this really, and you were in broader Siemens before as well, right? So you kind of probably seen other developments as well. Is the energy sector really treated differently to other sectors in any way? Because you're not selling, so just to be clear as well, you're not selling kilojoules of energy. You're selling equipment and construction projects to build energy production, right? Is it just like any machinery, or is there any other differences in treasury for the energy sector?
It's in energy. It depends on what you are building. No, the frequency. For example, if you sell computers, probably your risk is going to take 1 month, and then you start again. If you are building a turbine, then it's gonna take years. That's the main difference, the tenor. Then for the rest, treasury-wise, it can be treated in a similar way. It's a contract. You need to handle it. You need to mitigate the risk. You need to communicate with the banks, with the client. Similar process to any other business, I would say.
So what is that warranty? Because I feel like the warranty aspect is probably the maintenance and aspect, is the main difference, I guess, then. Because you have this equipment that you're maintaining and you have a service contract for that going onwards. If you install a big wind turbine, you're also doing maintenance of that turbine, typically as the original supplier. What are the treasury implications of maintenance contracts after?
It's a good one, because of course, if you see the fluctuations on the pricing and all the situations that we are facing with the Ukraine war and so on, you need to anticipate. You can always renegotiate, but it's not going to happen every time. You need to agree with your customer. If the conditions change, what are we going to do in terms of the warranties?
Because maintaining a wind turbine in Ukraine is quite difficult right now.
Yeah, and of course the raw materials raised, raise the prices. So you need to adjust your offer, because when you make an offer, of course you will include the warranties that they are requesting, the price, or the price that you are going to spend on this. So if all of a sudden I need to pay more for this because of any situation, that you need to anticipate this, otherwise your margin will be affected. So it's very important to try to assess, forecast your needs. Also consider that a credit line will not happen from one day to another. Could be a long negotiation for months with banks.
And is that so? Are there any treasury instruments that you use for that? Are you using trade? You're not using trade finance for a maintenance contract, are you?
I mean, if they can say so, they can say that I want a maintenance, because the maintenance also imply pieces replacement,
Equipment,
so exactly
parts that wear out, and everything like that.
But it's less. No, it could be 5% of the contract.
And so that be a performance guarantee, or would that be another type of guarantee in that case?
It could be a warrant.
Okay,
A warrant.
makes sense.
Yeah.
Okay, who are the typical clients of the energy sector? For instance, in construction work, it happens that a lot of times those are governmental institutions, cities, and so on. How does it go for the energy? I'm saying this because obviously the governmental institutions will always ask for guarantees from the providers, and that involves banks. But so in the energy sector, who are the typical clients, and would they always ask for?
I would say maybe 80% are probably public customers. So it's the government, institutions, and the other 20 maybe is they are related partners, right? Because at the end you won't build everything alone, right? So you get some partners, and either you combine the request together with your partner in order to have one face to the customer, or you share the risk. I do my part, you do your part, and then we go to the customer as a joint venture or consortium, whatever. So there are different ways of doing this.